This episode of the Old Dogs REI Network is brought to you by Mino Studio. Mino Studio is a pre- and post-production facility for all of your audio needs. Mino Studio's founder is an accredited audio engineer with top 40 and indie album credits. With over 30 years of music industry experience, Mino Studio can take your podcast from idea to reality. Contact Mino Studio at minostudio777@gmail.com for more information. That's minostudio777@gmail.com.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to join us get solid, no sales pitch real estate investing advice to help generate real cash flow. This is a twice-weekly podcast, and if you aren't already subscribed, go to iTunes and subscribe. Well, I'm here today with a very interesting gentleman with a great background in real estate investing. His name is Nizan Mosery, and he has been involved in real estate for the past 20 years. Currently owns many properties, nationally and worldwide. Started out in New York, owned a construction company, and worked on numerous single-family homes, multifamily, and commercial projects of up to 300 units. In 2009, he relocated to Florida, became a licensed real estate professional serving the South Florida market. He owns Keen Realty Solutions, a Florida-based real estate brokerage firm and one of the first commercial RE/MAX franchises in South Florida. Mr. Mosery and his team head up the multifamily division. He is also owner and CEO of Keen Management Solutions, a hands-on boutique professional management company. His background ranges from managing commercial assets, recognizing emerging markets, property management, syndication, mentoring, and advanced creative financing techniques. He is also the founder of the South Florida Mastermind Society, one of South Florida's first commercial real estate investment groups. Well, it sounds like you're keeping yourself pretty busy, Nizan.
Yes, yeah, Bill. Trying to at least, trying to keep myself busy and keep the momentum going.
That's great. Well, maybe you could just kind of elaborate on, how'd you get involved in real estate investing and why real estate?
I got to give it to my father. When I was a little kid, he always kind of put it into us that, a wealthy man is someone, or a wealthy person is someone who owns a piece of land outright. When you do that, you can be, no one can take that away from you. You own that piece of land. It's yours. You can do with it whatever you want. You can rent it. You can build on it. You can sell it. You can do many, many things with it. And another thing that he, drilled into us was that there's two types of people in this world: those that pay rent and those that collect. And son, you always want to collect. That was kind of the motto that we grew up with in our house. And, it's been in the background of my life. I was a stockbroker working with Lehman Brothers back in the 90s, working in retail fashion as well. When I was living in Israel, I had a restaurant. But during all that time, the one thing that I noticed that was constant in everything was that no matter where I worked, I was in some sort of real estate. I was either in an office building, in a single family home, in a freestanding building with my restaurant. So it all takes place inside of real estate. And, you know, what better way to build your empire by acquiring items that cash flow and appreciate in time. So, you know, going around, traveling the world, seeing different types of real estate and different ways of negotiating and putting deals together, that was a real eye-opener. And coming back to South Florida, one of the main reasons why my wife and I decided to move back to the States, we were living in Israel at the time, was the economy had crashed. And I mentioned to her, I said, you know, this would be a great time for us to go back to the States, buy property very, very cheap. We could hold it, we could flip it, we could do whatever we want with it, create a nice nest egg for ourselves, and then eventually go back to Israel. We had planned on moving here for just about a year, and it's been 7 years now.
Wow.
Yeah, it's fantastic.
Well, it sounds like you have really built up quite an enterprise there. You've got properties all over the world. You're in multiple states. It sounds like you've diversified too. You've got not just multifamily. Is that correct?
Correct. You know, just like in anything else, you know, if you're in the stock market, you don't want to put your money in one stock and that's it. You know, it's good to have a little bit of Coca-Cola, a little bit of Apple, a little bit of, Canon, diversify within that industry. And the same thing goes with real estate. You know, multifamily right now is a very hot commodity. Many people are looking to buy, looking to get into it, looking to invest in it. And so we see that as being a very hot item. So where everybody's jumping into that, you know, my strategy is, okay, let's move over now to another niche of real estate and see what's available and what's on the upswing. And, you know, so we're buying hotels, we're buying marinas, RV parks. We're looking at different sectors of real estate so that we can diversify, so that if there is ever another hiccup in any one of these asset classes, we have the other assets that can help us and help us ride through that rough patch. So it's also good to diversify in real estate as well.
You know, that's a real good point, and a lot of people should hear that too. I think it's important that spreading out, diversifying, because certain asset classes are affected by certain things in the economy, and being able to hedge your bet, you know, either way is a smart move.
Yes.
Now you mentioned you were in Lehman Brothers and so forth. There was obviously something that clicked. You mentioned also that your father had a big influence on you going into real estate, but to make the shift from working in the commodities or the stock side of things and going into real estate, was there sort of a light bulb moment that, boy, this really just convinced me this is what I want to do?
You know, it is. When I saw my father, when he bought his first building in Manhattan, and I'm going, many years ago, he had the store that was on the bottom of the building, and there was 12 stories above. And my father had his clothing store, and through the clothing store, he was also able to kind of leverage his time so that he would bring people in to work for him, and then he could kind of step out and look at other projects. And one of the main projects that he looked at, or that was brought to him, was the building, the office building that he had his store in. And I remember him sitting at the kitchen table with my mother and discussing this. And I remember them, discussing how an incredible opportunity it is, because it would let my father close his store, step back from retail, and manage a building that would every month would give him cash flow. Where if he was opening the shop or if he didn't open the shop, every month he would go to the mailbox and receive these rent checks and pay all his expenses from that, and whatever was left over was his profit. And to me, that was just, that was a beautiful concept.
Right.
Bringing people in, giving them a great space to work at, making it a very wonderful environment so that people enjoy working there, living there, and so forth. And every month he would just go to the mailbox, collect his checks, pay his mortgage, pay the expenses, and he was able to live a very comfortable lifestyle. And I saw the way my life was improving because of his actions. You know, suddenly they built a house in New Jersey, and we moved to New Jersey for a couple of years, and then he went and he bought another building, and my brothers and I eventually went to buy another building because we learned from him. And every time you go in and you learn to leverage other people's money, aka the bank, and then in the future I learned, through many of my mentors, one of them being David Lindahl, how to hedge other people's money as well, investors' money. And it was just like a whirlwind of information and of light bulbs going off in my head at that time. And then also while I was traveling for many years, going to a guest house or going to a hotel or staying at someone's place, you realize that you have all these people coming to you. And if you give them a great product, just like anything else, if you offer a great product, great service at a great price, people will start coming to you, and your brand and your name will then, it'll just expand like wildfire, and it'll go all around. And I noticed that in certain areas where I traveled, the really good guest houses or hotels that gave the best amenities, that gave the best service, quality of rooms, people would just flock to them, and the owners would just sit and collect money. And they would do this. And the beautiful thing about owning a hotel is that the rates can go up on a daily basis. Mm-hmm. That's another beautiful thing. So traveling around, seeing this, having the background that I had, I really understood that real estate is the way to go. And plus, listening to all of these other mentors and all of these other wealthy people, his name just escaped me. What's the billionaire that he drives around his old truck still? Oh wow. He bought oh wow, the names are escaping. I'll remember, but he says that most millionaires are created through real estate. Mm-hmm. A lot of people, they'll go out, doctors, lawyers, engineers, tech people. They make their money in their industry. They go and they invest that money back into real estate, because you can invest in a project that you can actually touch it and feel it. You can raise the appreciation on it. You can get your monthly cash flow, and you can actually even put a third-party property management company in between you and the property and have them deal with all the phone calls, and then they just give you your checks at the end of the month. And it's just a great way of making money. And plus also, I studied business law when I was at Pace University, and as you know, I worked for Lehman Brothers for a while and had clothing stores and restaurants and all that. But my passion and I guess my sense of smell was always towards real estate. I could walk down the street and see a building or a vacant property, and I'd look around and I could sort of foretell what would be the highest and best use for that property. And lo and behold, in a couple of months, someone would open up a restaurant in that location or a clothing store or whatever, and they would prosper. And I would always in the back of my mind say, you see, I knew it. I knew that's what would happen. So I have that kind of nose to smell out real estate, but you don't really need to have that nose if you know what you're doing. Because the beautiful thing about commercial real estate is the numbers don't lie. Mm-hmm. I started when we first moved to Florida. I was flipping houses because that was the thing to do here.
Right.
I was buying single-family homes for $15,000, $16,000, putting $5,000 into them and flipping them for $40,000. I was, doing all that. But being where I am in South Florida, I knew that was not going to last forever. And the thing about flipping houses is that the minute I stop flipping houses, my income stops.
Yes, exactly.
There's no one else doing it for me. I have to do it. And I also noticed a lot of other people coming into the industry, into the flipping industry in this area, and they didn't really know what they were doing. So they were going out and they were outbidding everybody, and they're raising the prices, and they're going out there and they're creating bad deals for themselves and the industry. So I saw that, and I said to myself, I have to pivot myself. I have to position myself correctly so that when the market dries up and there are no more foreclosures coming out on the market, that I would hedge myself against that so that I can go into the commercial industry. Because once I buy an apartment complex, an RV park, or a hotel, that property is going to give me cash flow for as long as I own it. And once I buy it, I don't have to do anything else to it. Where, as I mentioned before, flipping a house, once I sell it, I got to go out and find the next house to flip, or I'm not making any more money.
Exactly. But when you hold on to properties that are just continuing to yield rent or income on a regular basis like that, you already have that income coming in without having to do anything other than that first initial purchase. Exactly.
Well, but you got to get into the right deal.
Yeah, that's that's the key thing, right? Is yes. Really that diamond in the rough, and when you find that, boy, that makes a world of difference. Absolutely.
It's I kind of equate it to shucking oysters.
Mm-hmm.
You got to go through tons and tons of oysters. You got to shuck and just look. You got to be able to say no very, very quickly, so that you can get to the pearl, to the gem that's going to make you a lot of money. I've learned more about commercial real estate, about apartment multifamily investing from the projects that we didn't close. We have way more projects that we went through the whole due diligence phase, did everything, and didn't close on them because for one reason or another. The seller decided not to, the due diligence brought something up that the sellers didn't show us, or for whatever reason, and we learned so much more from that than we did from any other projects that we actually closed on, because there are more of those than the ones that we closed on.
Well, that's the truth. I think one of the things that we, in most cases, and that's why I always encourage people you got to take the step and get in there, because you learn more once you've made that first purchase, for example, than you'll ever learn in books and all the trainings and so forth ahead of time.
Absolutely.
But looking at that, what would you say your biggest mistake was that you've got 120 million in properties ranging in New York, Texas, Oklahoma, North Carolina, Florida, Illinois, Tennessee, Israel, Chile, France. I mean, you're all over the place. So you've obviously had a lot of experience buying properties. What would you say as your sort of biggest mistake that you learned from in the process?
That's a great question. The biggest mistake was taking the information that I had received for face value and not really investigating it deeper. Another mistake would be to not get building your power team in the market that you're going to be in. That's very, very crucial. And if you're trying to go into a new market without knowing anything about it, and you're diving in with both feet, not having your team in place, and when I say team, that's your property management companies, your real estate attorneys, your SEC attorneys, Securities and Exchange Commission attorneys, having these people, because your appraisers, having these people lined up will help you stay out of the bad deals.
That's great. Great advice.
And I say it that way because getting into a good deal, well, that's let's not talk about that because that's a good deal.
Mm-hmm.
It's the bad deals that you want to stay away from, and having your team in place in the market that you're at, and having them be part of the yes and no solutions. Where I can give you an example. We wanted to buy several hotels in the Texas market, and many times we were about to, pull the trigger and say yes, and then we said, let's pass it on to our property management company that we want to manage this property. And thank God we did, because they said, you know what, run the other direction.
Really?
We know this property has never been successful. There's something going on with it. We don't really know what it is. It could be on the wrong side of the street, the right side of the street. It gets the sun in the afternoon and not in the morning. Whatever it is, we have no idea what it is. But that property just does not cash flow. And it's been sold 4 or 5 times, blah, blah, blah. So they saved us. So one of our mistakes, going in the beginning was not finding those people in the beginning. That's very crucial to have your team in place. And another mistake that I made, or that I almost made, was going about it without having a mentor.
Good point. Good point.
Being in the Israeli military, I learned very, very quickly when my commander says, step here, you step here. When he says duck, you duck. When he says crawl, you crawl. You don't ask any questions, because he knows or she knows a lot more information. They've been there. They've done this already. So why should I, if they tell me to step right, why should I step left and possibly step on a landmine? I'm going to step where they tell me to. And the same thing goes in life. I have 2 wonderful daughters, and I try to teach them as well, saying, hey, look at what I'm doing. Look at my mistakes and learn from them. And the same thing in business. Find yourself someone who has what you want, do what they've done, and you'll get what they got. That's been a big philosophy of mine. So one of the big mistakes that people do is they try to get into this business, or in any business, without a mentor, without someone who's done it and who's currently doing it as well. So, for the people that are listening to this, find yourself a mentor. Find someone who really has what you want. And it doesn't matter if it's in real estate or if it's in the tech business or in any business. Find a mentor. Find someone that has done what you want to do and is extremely successful. And all you've got to do is follow their program, follow their footsteps. And it's that easy.
That's great, Nizan. What would you say your biggest success was with a property purchase?
Our biggest success, we just sold a couple of properties, and we're bringing another multifamily property online where our investors are making, an incredible return on their investment. But that wasn't one of our greatest successes. One of our greatest successes was one of our first, when I say ours, it's my business partner, Laura Marmontel, and myself. Mm-hmm. We went out, and when we first started this business together, I was telling everybody that I knew, all my hard money lenders for my single family loans and all my appraisers and whoever I knew, I was telling them that I was getting involved in multifamily investing, and what I needed from them was A, B, C, and D, and this is how they could help me. So one day I was speaking to one of my hard money lenders who's up in Boston, and I told him, I said, hey, Frankie, I'm looking for multifamily. Do you know anybody that's, do you have any loans out that that you need to foreclose on, that they're not paying, that they're going into distress and blah, blah, blah. And one day he called me up. He goes, hey, I have this 27 unit up in Leesburg, Florida. I've never heard of Leesburg, Florida. It's about an hour north of Orlando, a very small town. Mm-hmm. I said, 27 units, Leesburg, what I've been told is I need a market that's about 100,000, the MSA, the Metropolitan Statistical Analysis, and blah, blah, blah. And this is what he's looking. He goes, well, they're selling it at a 20 cap. And and for those, that's the capitalization rate. And, at first it just didn't click because of the location, the size. It didn't click. So I said, no, thanks. I hung up the phone. And a couple of days later, I was talking to my partner. I said, we have this. What do you think of this? It's a 20 cap and blah, blah. This is the NOI, and this is what they're selling it for. And when I said it myself, I couldn't believe it. I said, oh, my God, I got to call Frankie and see what's going on. So about 2 weeks had passed, and I called him up. I said, Frankie, do you have this property still? He goes, yes. I said, okay, we want it. Make a long story short, the property had a subsidy from the agricultural department. A rental subsidy, and the subsidy was put on the property. The woman that owned the property, she inherited it from her late husband, and she knew nothing about real estate. So the property management company, her attorney, and the broker were kind of, skimming off the top over here, skimming from there, and not really giving her the real layout on the property and what was going on, and plus they weren't putting any money back into the property. So on the day that our money became hard, which is non-refundable, our earnest money deposit, we were notified by the agricultural department that as soon as we closed, the property would lose its subsidy. So 95% of the income would vanish. So the property was worth zero at the time. So we were freaking out. We said, oh my God, what are we going to do? You know, and they said, well, you know, the property is not going to have the subsidy. The tenants aren't going to be able to pay. The tenants are going to lose their home. Now, the people that were living there were World War II veterans, Vietnam veterans, old people, people that didn't have money to pay their medication. They didn't have money. They couldn't pay for a moving company to move, let alone get another apartment. So we were kind of distressed on that part. We were peeved. How can the agricultural department or the government subsidize people's rental income and then tell them, well, we're not giving it to you anymore? And one of our missions is to make sure that we supply a very a great place for people to live. And we just couldn't live with the fact that 26 people that served our country and were elderly were going to get kicked out because of the property management company's negligence to maintain the property. You know, the structural, you know, the roofs were leaking, electrically weren't working. The kitchen cabinets on some of the units were so moldy they were falling off. So we fought tooth and nail for about 4 or 5 months with the seller, with we negotiated with the agricultural department, with Section 8, so that at the time of closing, new vouchers were going to be handed over to the tenants themselves. The property would not get the subsidy, but the tenants. And the tenants at that point would have the ability to leave or to stay. You know, leave and go to another complex and hand over the voucher, or stay. We knew that they weren't going anywhere because they just couldn't afford it. And so we were very happy. We fought tooth and nail to get it. We called. We were very lucky that we were involved with David Lindahl's organization, and we had the back office helping us. We had our coach. We had a direct line to David Lindahl, his cell phone, so that anytime we had a question, we didn't know what to do, we called the office. Everybody in the office was helping us. Our coach was fantastic. He was on board with us, helping us, making sure that things were done right and correct. And finally, the day of closing, the vouchers were issued to the tenants, and they were all able to stay. And at that point, we were so stressed out, and it was 3 hours away from us, and we kind of had enough of the whole project. So what we did was we went back to David Lindahl and to the organization, and we said, hey, do you know anyone that lives up in the Orlando area that might want to buy this from us? We'd be willing to flip it to them. Dave has another successful student that has a mastermind group up in that area. We called him up. He put us on to a woman that is in his mastermind group. She came with her investor to the property. They walked the property. We flipped it to them. We made $80,000 gross profit. We gave, we paid our expenses. We did that. So it was a win-win for everyone. The tenants got their property. They were able to stay in their home. We flipped it to another tenant, to another investor that still has the property today, and she loves it. It's cash flowing beautifully. We were happy that we, didn't lose our earnest money deposit. We were able to close on the property, because that's very, very important that, for us is to do what we say we're going to do.
Right.
So we put the property in the contract, we closed, we flipped it to another investor that was very, very happy. Everybody made money, and we were thrilled that we were able to, take a lemon and make, lemonade with it.
That's great.
So that was one of our huge success stories. And we didn't make a ton of money on it, but we were able to maintain people's homes and maintain and keep them in their homes. And that was a big issue for us. We did not want anybody to lose, to be on the streets because of what we were doing.
And that's great to hear too. I think, there needs to be more focus in that area. Sometimes people are just looking at the numbers and they forget that, behind those numbers, there are people, and that to be able to take them into account and to be able to turn that around so that these folks would not lose their homes. Yes. That's a great story. Thank you for sharing that. I wanted to ask you too, we have a number of listeners. Some are considering getting into real estate investing, maybe a little intimidated with getting started, especially when you talk about, some of these bigger deals and so forth. Mm-hmm. But what kind of advice would you give to those folks that are maybe on fixed incomes, maybe limited reserves and so forth, but they want to get started and succeed, to be able to generate some additional cash flow? What would you say would be a great way to get started for them?
There are a lot of books out there that can educate you on real estate, on the different market cycles and whatnot. Read. Education. Educate yourself. Education is cheap today. We have the internet. We have access to all this information. We have access to different real estate brokers. We have access to different real estate gurus, if you will, online, that you should vet out very, very carefully before you give them any money. But people on fixed incomes, start off where you're a little bit, where you're comfortable, but a little bit uncomfortable. Don't throw all your money in and not have any money to live off of, because then you're going to be stressed. You're going to make decisions based on stress, and you may make mistakes when you're stressed and when you're anxious and when you need to do something. The worst thing to do is to close on a deal because you have to. That's when we make mistakes. I started out with David Lindahl. I found him on the internet. I bought his home study course. I did exactly what he told me to do. I found a little fourplex up, about a half hour away from my house. I got their information, and I went out and I did it. It's very, very important to get educated correctly, and find someone who's doing what you want to do. If it's flipping a home, if it's buying multifamily, get with someone that can teach you, that can show you, that can help you speak to brokers, that can tell you what to look for. There's a lot of information today on the internet, a lot of free information where you don't even have to buy anything. It's all out there. Go out and educate yourself. Educate yourself on the neighborhood, on your backyard. The best place to start usually is in your backyard. And I say usually because if you're living in a place like Miami or New York or LA or San Francisco, these markets are a little bit harder to start in if it's your backyard, because they're hot zones, what I call a hot zone. Everybody's looking to get in there. Prices are very expensive. Capitalization rates, cap rates are very, very condensed. So the income versus the purchase price is very, very low. So you're not making a lot on the cash flow. So you got to be careful where you want to start. But getting educated and learning about different markets can also help you decide where you want to go and where to start. When I started with David Lindahl, he gave us a broker script, how to talk to brokers. And obviously, it's written out in his voice. So, I took out the critical points that I wanted to speak, that I wanted to get out of the brokers. And the first thing I did was I wouldn't call any brokers in my area, because I said if I start calling them and I sound like a fool, then I just burnt that bridge. So what I did was I called brokers in like Ohio or Utah or, Wisconsin, places that I at that time never thought I would invest in. So it would be okay for me if I messed it up with them. And, I think there's like 4 people in Wisconsin, so they were very happy that I called them.
I love
it. So start off by educating yourself, reading all the books, reading about the different market cycles, about how to flip a home, how to, there's great TV shows, Flip This House, all these things that you really, people getting involved should really look at and watch what they're doing and learn from them. When I first moved to Florida, I went to Home Depot, I went to Lowe's, I went to all the different stores with a pen and a paper, and I would write drywall, nails, mud, paint, cabinets, faucets, and I would do price comparisons.
That's smart.
So I would know, for faucets, you go to Home Depot. And then, you know what? Even then, my wife went online and she found a place online that you can buy these awesome designer faucets for the same price as you would buy a regular faucet at Home Depot. But if you bought these faucets at a designer shop, they would cost you $300-$400, but we found them where we could buy them for $30, $40, $50. And they're great, they're beautiful. And so you can really get a lot of information by just educating yourself.
That's great.
But don't over-educate yourself. There's this thing that we call analysis paralysis.
Right.
Where you just keep analyzing.
And you never do.
And you never do anything. By the time you analyze this property 40 ways to Sunday, it's already gone.
Right. That's happened to me.
Yeah.
Well, Nizan, I wanted to also kind of look at, too, your current business. You obviously have a lot of great things going on with that business. And what are your plans and vision for the future of your company?
Great question. My business partner and I, we followed Dave's system to the T. We've been very successful. Knock on wood, we have great investors. We do things the right way. We're very transparent. We're very open, and we're very conservative with our numbers. So we've been able to get into good opportunities and really hit the mark before, hit our projections before our timeline. And so what we've decided to do is to go really big. We created a real estate fund, and we're now raising money for our fund, and the fund is going to go out and acquire value-added properties, multifamily, mid-tier hotels, marinas, RV parks. We're now looking at some development projects as well in Jersey City, in Costa Rica, for example. We're looking at a great property in California, a marina. So all these properties have value-added components where we can go in, add value, make the place pretty, raise the occupancy, raise the rents, force the appreciation. So for us, we want to pour gasoline on our business. And the way for us to do that is by creating a fund. And the first tranche that we're going to do is we're raising about $10 to $20 million for our first tranche. We're going to do a soft close and then deploy that money and buy several assets. And then once we acquire those, we're going to reopen for the second tranche and raise another 10 to 20 million and deploy that as well. And my goal is to have a fund of $200 million within the next 4 years. And we've joined the Family Office Association, where it's an association that gets family offices together with vendors, people like myself, fund administrators, all these other vendors, and we combine our forces with family offices because they want to go out and invest in real estate, but they don't necessarily want to have the headache of dealing with the property managers or dealing with the closings and so forth. So they come and they invest in our fund. We give them a very nice return, and then we go out and we acquire the real estate. And we have such a very strong track record of success that that's what people are looking for. They're looking for the conservative approach, transparency, and success and a strong track record. And that's what we have. So we're looking for the big boys now. We're really expanding it.
That's exciting. Wow. Well, this interview has gone so quickly. I'm looking at the time and going, wow, I could go for another hour here.
Yeah, absolutely.
No, it's just fantastic information, Nizan.
Thank you.
But we're going to have to sort of wrap it up here. And in our wrap-up session, we have a series of quick questions that I ask you, and you can respond as quick as you can on the answers, and then we'll wrap up letting people know how they can get a hold of you or find out information about you and what you're doing. Let's go ahead and start with our wrap it up. Favorite real estate book?
I have two. One is by David Lindahl. It's called Emerging Real Estate Markets. Okay, it talks about the real estate cycles and so forth. Fantastic. The other one is Commercial Real Estate Investing 101. How small investors get started and make it big. And that was written by David Lindahl, and the foreword was written by Donald Trump. Those are really, really fantastic books.
Great. Favorite business book?
Blue Ocean Strategies.
Okay. Most valuable website that you use in your day-to-day business?
WhatsApp.com is my favorite website because I put it on my computer and I can send text messages while I'm sitting on my computer. I don't have to text from my phone.
Love it. Favorite app?
WhatsApp.
Oh, great. Yeah, I love that.
WhatsApp because you can create groups. You can send voice, video, text. It's encrypted on both ends, so it's very, very secure, and people get the messages immediately.
It's international, too, which is great.
It's international.
Yeah. Okay, and our final one on the wrap-up here. If you, let's say something catastrophic happened. I hate to even go there, but let's say something did happen. Everything you had was gone, except for $1,000 in your account. What would you do to launch your real estate investing business, given what you know, but you've only got $1,000?
Okay, good question. All right. You put me on the spot here. I would probably take that money, and real estate, we're kind of in the marketing business. We're marketers. Our product is real estate. So I would, if I had to start making money, I would look at what would be the easiest thing for me to flip, to make cash quickly, right? The goal is the fastest way to the cash. So I would have to think, what's the fastest way to the cash? Probably to flip a couple of houses, make a couple of $1,000, and then maybe even flip a 4-plex, a 10-plex, a 20-plex. So I would take that money, I would invest it in a mailing list, and I would start advertising and doing mailings to get properties that I could flip. So I would use that money to buy a list of owners of properties. I would start building my buyer's list and my seller's list with that money.
Great information. Again, I feel like we just didn't have enough time for all the great content that you could provide us. We thank you so much. How is the best way for people to find out about you, your company, reach you?
My website is www.investwith, and it's 3 letters now, CIP, Charlie Indigo Papa. CIP stands for Cornerstone Investment Partners. So the website is www.investwithcip.com. My email is Nizan, N-I-Z, like zebra, A-N, at investwithcip.com.
Great. This has been just a fantastic interview. I thank you so much, Nizan, for joining us. But we always close out every show with having our guests give us their best hound dog howl. Okay. In fact, you've been speaking to David Lindahl. So far, I think he's got one of the best. He had a hilarious hound dog howl, and he's from Boston. I'm going, what? You don't even have hound dogs up there. But Nizan, go ahead and just let us hear your best hound dog howl here.
Let's see. Ow!
Oh, that was classic. That was great. Thank you.
Bill, it was a pleasure. Thank you very much.
Well, thank you, Nizan. And gosh, I definitely want to stay in touch with you. You've got some wonderful things happening, and I'm sure a lot of our listeners are going to value deeply from that information, and hopefully there'll be those that'll get a hold of you as well.
Yeah, please. If you're looking to get started in real estate and whatnot, my mentor was David Lindahl. I highly recommend him. If you want to know how to get in touch with him or hear more about him, or if you have questions, email me. Feel free. I'm available. One of my philosophies is to give back to the community. Give back to people that, I've been given a lot. I've been blessed, and I want to give back to those. I want to help. I believe that other people's success is my success as well.
Well, thank you so much, Nizan. I think that approach and philosophy, I hope, runs deep in this industry. So thank you, and just really, really appreciate your coming on.
Thank you.
And for all our listeners out there, just keep on moving forward, and there's some great advice being given here. Take notes. We're going to have all of this recapped in our show notes, so you'll be able to go in if you missed a link or a number or email or what have you. It'll all be in our show notes, so you can get that information afterwards. And thanks for listening as well. Take care, and God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.